Good afternoon, everybody. Welcome to our Selecting an Option Strategy webcast. I'm Connie Hill. I'm happy that you've joined me here today. How many of you have ever been disappointed by what a stock does? Meaning you expected the stock to do something and it didn't do it. Has that ever happened to anybody besides me? Well, it can happen, can be a little bit frustrating. Today, we're going to talk about maybe some tools we might use to help us evaluate our expectation of the stock. And that may help us identify what strategy we might want to use. All right, so that is where our focus is going to be here today. Appreciate all of you that are coming back week after week. We appreciate seeing you here. I am joined in the chat by Cameron May. I'm happy Cameron's here. He's a fellow friend and coach and veteran of the market. So as you have questions, go ahead and chat those in. I'll keep my eye on the chat. Sometimes there's questions I have to answer, but there might be a few things that Cameron can pick up for me. So I will appreciate him doing that. Well, I hope you're following us on X. I'm Connie Hill CS. Cameron is Cameron May CS, and we'll post educational content out in our X account throughout the day as we notice different things. In fact, I posted on a couple of candlesticks, charts on candles or candles on a stock chart that if you want to answer my question, I would love to hear your thoughts. All right, let's go through our disclosures and lay out our agenda for today. Options carry a high level of risk and are not suitable for all investors. What we talked about today is intended for education and informational purposes. Don't consider it a recommendation of any sort. We will be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. When we use multiple legs, like we do in some strategies, keep in mind there will be multiple commissions and fees charged. Past performance of any security or strategy does not guarantee future results or success. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. That's something that's a little bit different in your paper account than your live account. In your live account, things can be assigned to you early, absolutely. But in the paper account, that's one of the functionalities it doesn't mimic very well. So just be aware of that difference. All right. Bring you up to date on what some of the events are coming up. New York's full. Whoever's going to New York, man, you guys are on the ball. And we've filled up, so registration is closed there. But we've got Chicago coming up, then Washington, D.C., and then a Dallas Market Drive event in September. So if any of those look appealing to you, you want to go there, you live near there, head over to those areas. Take advantage. It's free. We treat you good. We feed you lunch. We even feed you a little bit of breakfast if you're a light breakfast eater. So take advantage of that. If any of you were at a recent one, want to shout out to or chat out to the group here, how your experience was, feel free to do that. All right, our agenda. Typically, we take a look at the market conditions because that's going to set our frame of reference for what kind of strategies we might consider doing. And discuss what those strategies might be. Today, we're going to take that kind of a step further, and I'm going to show you some tools we can use to help us manage our expectations, what we think the stock might do. Of course, we're going to look at a lot of examples, and I have a few follow-up things we need to address as far as trades that we have going on in the hopper and give you an update on it. So pretty full agenda for today. Ricebird said you love the live events. They're educational and fun. Fantastic. Appreciate you throwing that out there right now. All right, let's go look at our Thinkorswim. Let's go check out what the charts are looking like here. And let me come over here with SPX. All right, got kind of a 3-month point of view up because we're kind of, I want you to be able to kind of drill in and see it. Most of the strategies, not all strategies, but most of the strategies that we deal with in this class are more intermediate to short-term type strategies. Therefore, I'm not going to have a 200-day moving average on here. I took off the 100-day moving average as well. What we do have is a 10-period moving average, which is the blue, and a 30-period moving average, which is that reddish colored line. I'm going to talk about these other studies in a moment. Okay, but overall, what's the market doing? higher highs, higher lows, a little pullback here. Some of you, if you're paying attention to different price patterns that you might see on the screen, let me get something here. Something's not working quite right for me. We might see a flag pattern, right? We might see a pop, up, pop, up move, nice run up. And now today, 2 days of pulling back, maybe making a little flag formation. It just kind of represents a pause in the pattern, but it's a continuation pattern, meaning our expectation is that it's going to continue. Hopefully this little pullback, most ideal is 2 to 5 days. Sometimes it lasts a little bit longer. We just don't want it to retrace all the way back down the flag pole. If I stretch this a little bit here, so we can see more of the price action, right? We just don't want it to retrace clear back to the beginning of where that flag pole started. So down a little bit here today, was flat for the most part during the day. Nothing too surprising. Same thing on the NDX. Set a new high 2 days ago, kind of just floating a little bit, pulling back, consolidating, maybe looking like a little, kind of a short little flag pattern here on the NDX. Now, the Russell 2000 we don't talk about a lot because it doesn't have a lot of bigger cap stocks, and so it limits our opportunities for option trading. And so therefore, I kind of ignore it a little bit, especially in this class. But the Russell 2000 has been performing well. Dow Jones can be a good index to use some of the stocks on that index for option strategies because they're the larger cap stocks. They have a lot of volume activity going on, which typically leads to greater open interest in the options contracts. Okay, same thing there. It's just kind of looking very similar, right? Flag pole racing up, 2 days of consolidation. We're going to wait for it to break out. When we see this kind of a pattern on the indexes, it's really likely to see the similar thing on lots of different stocks. Okay, it doesn't mean all of them are going to be doing it, but you have a tendency to notice that when it breaks out of a flag pattern, there is a tendency to see a lot of stocks that break out of that flag pattern on the very same day. So that's why we kind of want to keep ourselves tuned to that. Now, I'm going to ask my question here again. How many of you have been disappointed in what a stock has done to you before? Meaning you had an expectation of the stock and it didn't do what you thought it was going to do. Sometimes that can be a frustrating experience, right? When you're like, man, the stock looked like it was going to do A, B, and C, and it went down to X, W, Y. Okay. Yeah, it can be a little bit frustrating. Let's talk about some things that we might be able to use to help us out here. Now, I am going to start out with a stock from our watch list that we're using for our class watch list. This watch list I created in our short verticals class on June 26th, but we also use this watch list for our class in here, meaning any of the stocks on this list, typically we're going to find that they're very liquid and we should be able to find an option strategy or option contracts there that we wouldn't mind, we wouldn't mind using. Yeah, it can be frustrating. Yeah, Riceford says, it's happened to me a couple of times. Who's counting, right? That you're expecting one thing and it does another. So today what I want to talk about a little bit is some different points that we can use to help us identify what's our expectation of the stock. The first thing we're going to use is actually in the column. And then the second thing we're going to use are the studies I have on the chart. Okay. I'm going to pick a stock on our list here. I ordered these by the percentage of what they've done in the last month. So some of these have been negative this month. We can see which ones those are. And then some of them just haven't moved a whole lot this month. And so we might not have really big expectations for something that's maybe only up 2% in the last month or 5% the last month. We might not expect a real big movement from it. But maybe something that has been moving and has brought back a bigger number, whether it's up or down, yeah, we might have an expectation for it maybe to move a little bit further than a stock maybe that is only up 3% this month in the last month. Okay, so that's going to be one thing that we're going to look at. So I'm going to collapse this here, and I've got this expectation checklist. Okay, so first item on the checklist that we're going to put in here is 1 month percent change. Okay, you can title that however you want. I have a script that I use for this. Probably most of you have this script. We have new people joining us all the time. So if you don't have the script, let me copy it out there for you. You don't have to use 1 month. It's just kind of what we're using as an example here today. Let me throw that in the chat. Anytime we share our scripts with you, they're never guaranteed as to accuracy or timing. So you want to be aware of that. Chris wants to know, is that month 20 days or current calendar month? It's actually 21 days. Okay, let me show you what Chris is asking about here. In this 1 month script that's in our columns, let me open it up for you. I'm just going to come up here, right mouse click, and I'm going to say edit formula, which just is going to allow us to look at it, except it didn't bring it up unless it's hiding somewhere. Let's try it. I think it is hiding somewhere. Where did it go? Let me go. Huh, that's a little strange. Let's try it again here. Oh, maybe it's because of this. Let's try this. I'll hit customize the column. That's fine. I'll do it the long way, and then I'll click on this, the little scroll thing that shows us the script. I have in here 21 days because 21 trading days is about what a month is. Now, February, a little bit short of that, but overall, that's what I typically use in that column. Basically, how many trading bars? 21, right? We would have probably 20. Well, I'm not going to say. I was going to say we have the 4th of July, so we've had a holiday in there, so that might alter that just a little bit so that it doesn't line up exactly with the calendar month, okay? In any case, that's what we're looking at. So we might have a higher expectation for something like Coin or Oracle or CRISPR or Hood or Datadog. Datadog was just put on the S&P 500, I believe, so it's been getting some good traction with being that new addition to that index. So yeah, we might have a bigger expectation. Now I'm going to come down here on the list a little lower. What if we looked at this one, the trade desk? It's $74 stock in the last month. It's been up 3.6%. As we look at the trend lines here, both of them are kind of flat, maybe even slightly to the bearish side from the peak here at 80 bucks to where it's now at 74. And you know, the move has just kind of been very gentle and very gradual. Okay, let's talk about these other measures I've put on these different studies that we're going to be using here today. I'm going to go to the studies just so you can see what they're called. RSI is the first one. Just go to your box, type in RSI, Relative Strength Index is the abbreviation for that. And that gives us an idea of the strength of the momentum and the direction of the momentum. Okay, it has boundaries at 70 and at 30. Below 30 is oversold, above 70 is overbought. Overbought doesn't mean it's bad. It just means buyers are in control. Oversold means sellers are in control at that moment. Okay, the other study I have on there is ADX. ADX gives us an idea of the strength of the trend, whether it's a bullish trend or a bearish trend, just gives us an idea. 25 is kind of the magic number. We look for something to have a reading of 25 or higher to let us know that the strength of that trend is strong. Now you might be asking, well, what trend, Connie? What trend is strong? Both of these measurements is 14 days, and Wes Wilder created both of these. That was a pretty typical range that he liked to use, was 14 days on these oscillators, okay? 14 trading days is just a day short of 3 weeks, so it's a shorter time frame, okay? We're not talking about looking at a 60-day or 50-day moving average or anything bigger than that. Okay, implied volatility, you're probably familiar with this, right? Is the stock's volatility high or low? You know, to gauge whether it's high or low, sometimes I like to come out here to a 1-year chart and just kind of see where's the lowest points it's been, where's the highest points. Highest points look to be back here when it was dropping. Okay, implied volatility. It was 1.1, 1.11, 1.01. So something above a 1. Okay. And then the lower points have been down maybe here. This is a 0.42. This is a 0.48. Right now it's sitting at 0.68. So it's actually kind of between the high and the low there. So maybe we would say on this one that it's kind of an intermediate level as far as the implied volatility goes. Now let's go ahead. We're going to take a look at one stock. All right. The first one we're going to look at here is CRISPR Therapeutics. It's on our list. It's changed about 30% in the last month. Okay. Going up in a positive direction. So, if that's just for the last month, imagine over the course of the year, if it kept up that pace, man, that would be a lot of movement in that stock. And you can see it's been low before. It's been down here at 30. And it's been climbing up at a pretty quick pace. Let's talk about RSI. I told you that gives us an idea of the strength of the momentum. Is the momentum weak, momentum strong? In this case, what we're looking for is the direction. Is it going up or is it going down? Right now on the RSI, it's above 70, so it's in that overbought area. That means buyers are in control, and it's heading up, and it looks like the number on it right now at the close of the day is about 80. Now it's fixed. It can go down as low as 0 and up to 100. So it's not up to 100 yet, okay? But those are the ranges for the RSI. So we would say, okay, it's in an oversold or overbought area. Buyers are in control, which means bullish. ADX. Told you if the value of the ADX is 25 or higher, then we would consider it strong. That the trend is strong. If it's below 25, say it's between 20 and 25, it's kind of like approaching strong, but not strong yet. But say it's 30, 35, 45. Those are very strong numbers, okay? So the higher that ADX goes, lets us know the strength of that shorter-term trend is strong. Okay. Based on the stock going up, say 30%, let's go to our watch list here. Or not our watch list, our checklist. So we're going to say RSI, and you might, say if it's bullish or bearish. I'm just going to write, bullish and bearish here. You decide which yours is. ADX, I'm going to put here, we're looking for something above 25 to be a strong trend. And then implied volatility is going to help us as far as knowing how volatile has the stock been. Have these moves been pretty big? Have they been fairly low and shallow? Let me zoom out here a little bit. We'll go to that 1 year look, and we can see, well, the higher values have been on the implied volatility here about 77, 70. Let's get over here, 83. Okay. Recent high 70. Right now it's at 62, and the lows have been around what? 50, 43, 46. So in the 40s is kind of where the lower range has been for the stock right now. Now, if a stock's trending up, it still may have a little bit of volatility because if it's making big moves. If it's not making really big moves, maybe implied volatility isn't going to go up so much. Now, let's kind of zoom in right here. So recently, it's been fairly flat. Well, moves have been big. It hasn't been dropping. So it has been increasing slightly, okay, just kind of slightly here. So our expectation for movement here might just kind of be what it's doing right now, still kind of hanging flat in the range that it's in. If the stock were to start to drop, we'd expect implied volatility to go up. So that can influence what our expectation of the stock is. If we think big moves, small moves. Okay, given all this data together, all right, the fact that it's in an overbought range, the fact that its score on the ADX right now is 39, would like to see it above 25. Implied volatility is flat. tell me, and go ahead and chat this in. I'll give you an opportunity to look at this. What is your expectation of the stock? Do you expect big move up, small move up, even, small move down, big move down? Okay, based on just the data we've been looking at here, including the 1 month percent change, which I'll pull back up here real quick, because that was about 30.96 is what that came out. Okay, would you expect, here, I'm not a good drawer, but we'll use the drawing tool here. Do we expect sharp move up, slight move up, even, slight move down, big move down? Okay, based on all of that. Go ahead, chat into me. Brooke says, uptrend continues at a similar pace. Okay. Uptrend continues at a similar pace, and I would say the pace right now is kind of strong, right? And it's not that we know what a stock's going to do. Man, we'd be so happy if we knew what a stock was going to do, right? But we do kind of form some expectation of it. Okay. David says a slight move up. Okay, so both of you are on kind of the bullish side with these arrows here. Anybody else want to weigh in here on that, what you might expect? I'm gonna put myself, Cornelia says maybe up slightly. Thank you for that. Upward, but slower. So kind of like it's made some big move now, but maybe it's not going to continue to make big moves. So maybe we'd just go with the slightly. Okay. James thinks, maybe a possible pause and then continue in an uptrend. Yeah, it could be. As we're looking at it today, and I'm just going to kind of zoom in here and let's get rid of those drawings. What has it done? Well, it had been in a flag pattern. It broke out, not in this class, but another class. We took a trade on the breakout here of the flag, and our expectation was that it would go the height of the flagpole. Well, in these 2 days, it didn't quite get that high, didn't quite reach that target, but pulled back for another couple of days, right? So we have a little bit of a 2-day flag going on here. Boom, it busts out again. Okay. So expectation, you could, depending on how you want to interpret the information, because we all have different experiences, and one interpretation doesn't mean it's right or wrong, but you may have different expectation than your neighbor, right? Chris says, I would assume price would continue upwards, but at a reduced momentum. Okay, that very well could be, although I'll tell you the ADX is pretty strong here. And it's up here in the overbought area for RSI, and there's still room for it to go. Okay. Well, I'm going to agree with all of you in the sense that I think it's going to go up. Now, if we knew how high it might go up, that would be lovely. None of us are going to know that, but that might help us choose what strategy we might want to look at, right? So it's going to put us over here probably in the bullish column again. Okay, and so just kind of taking it, a step further, if we expect something very strong, then maybe a long call, maybe a synthetic stock, maybe possibly a long call vertical, could go on that list. But if it's a more muted move or not a bigger move, then maybe you'd put yourself in the short put vertical camp, possibly diagonal camp, or cash secured put. Actually, I could see a big expectation wanting to use that strategy. I could also see a slight expectation of movement using that strategy, just kind of depending on your outlook. Yeah. David says, it's a down day followed by a close higher, so might gap up tomorrow. It could. Yeah, it did close up near its high of the day. That's true. Okay. And we're going to take this to the next level. Hopefully you're starting to feel like, okay, I have an expectation of the stock. I know what strategies to to kind of focus on. Okay. And we're going to come back and we're going to run some numbers. Okay, let me tell you what I had in mind. On this stock, we're going to go to the trade tab, bring it over here, go to the trade tab, and you can see it's got some weeklies that could be possibilities, as well as some monthlies here. Honestly, I already picked through the weeklies, and there's not a lot of option activity, meaning open interest is fairly low. July is a little bit short on time, so we're going to come out here. We're going to look at these August options. Can't believe we're talking August already. All right. Now, as we look here, if we were thinking more conservative, then we might say, well, let's maybe we don't expect the movement to be that big, maybe a short put vertical, right? So we could construct maybe selling a 52.50 or maybe a 50 strike here. Implied volatility in the August options, because I think we're going to have maybe an earnings report in there. I'm not showing it yet. Let's see when it reported earnings last. Last reported earnings May. Okay, so this one might not kick in actually until the early part of August. So that's why it's not showing up there yet. Okay, so we have a little bit of time. We could possibly sell the 52.50 strike or maybe the 50. Okay, on a short vertical here. So I'm going to queue this one up. I'm kind of liking the open interest a little bit better here in the 52.50. And so I'm going to say sell that vertical. And it's a good thing this one had a little bit more volume here today. So we could go 52.50, 50, or we could spread it out $5 wide to maybe bring in or be in some contracts, a little bit more contracts being traded here. So if somebody's doing a large number of contracts that they want to do, okay, then maybe they'd spread it out. If you're somebody that sells 10 or 20 contracts at a time. In our class, we don't typically risk that much, right? Let's go ahead, and we're not going to do very many contracts here. Will be a small percentage of this total here. So I'm going to leave it at the 52.50, 50. And in this one, we're saying we have basically a $1.15 to gain, right? And that's our max theoretical gain. Our max theoretical loss is going to be 2.5 minus the 115 for $1.35. So we're risking a little bit more than what we have to gain. And even though we're at a 37 delta here, it's about a 54%. I could see some people being comfortable going out to this 50. In fact, I think I'm going to switch it up here. It's changed enough since I was playing around with it to do that. So let's go a little bit further. Okay, we'll sell the 50 and do the 47.50. So in this case, it's 75 cents contract. That's quite a bit different than a $1.15, right? So 2.5 minus 75 cents. It's going to give us $1.75 of risk. Is that a good enough return for most people or some people? I don't know most people, right? Because I don't get to go around and survey everybody. But if we have 175, our max potential loss, 0.75, our max potential gain, let's see what that equates to here. 0.75 divided by 1.75 is going to give us a percent, about 42%. So that's with the 28 delta, and it's starting at a position of being able to likelihood of expiring out of the money, that option 64%. So we like 60 or higher on that. Let's see what we're seeing here. Lakshmi says, CRISPR is definitely good for a vertical, sell two short. You have shortcut verticals. I think maybe you meant short put verticals and buy one call with the credit. That's getting creative, Lakshmi. Absolutely, you could do that. In this class, there's certain strategies that we need to kind of stick with, per se. So something that's maybe a little bit more advanced like that one, although not a bad idea at all, you could do it whatever you might want. You can do a little mixing and matching there. It's not something we probably will explore in this class, okay? But Not a bad idea. Now, Brooke says, are you selling a vertical because you expect the volatility to decline over time? Actually, we're going to put up a comparison here, Brooke. And what I was going to do here is I was going to do a long call vertical, right? If we're expecting short movement or smaller movement, maybe a short put vertical. If we're expecting bigger movement, this is almost to 55. So we're going to use the 55, 57.50, and we're going to do a long call vertical. That is not quite right. Let me just delete that. Let's go back to our 55 and go by vertical. There we go. All right. Not sure why it is 55, 57.50. I would expect my debit to be a little bit bigger than that. I'm wondering if it's kind of doing something on there with it. Maybe the spread, maybe it's spread out so wide over since the market closed, which wasn't really that long ago, but I think that's what's going on here. 290 by 480, because we're seeing zero open interest there, although there's 219 of volume here. I think it's artificially wide right now. And that's kind of a problem we run into in this class is the markets are closed. And so, orders go in and the bid-ask price changes, right? Depending on what those orders are, which is why Thinkorswim platform really likes to use the midpoint price. So I think what it's seeing here is huge difference in the bid and ask spread, and that's why it's coming out to be so little. Quite honestly, earlier today, it was in the neighborhood of $1.20. Okay, $1.20 is what the debit was there. Even though it's not showing it here for us. That's kind of what I was seeing earlier in the day. Yeah. Atul says, so what could be few simple trades to take based on indicators? Well, that's what you get to decide. Okay, and that's kind of why I went down through that list to say big move, you might choose this or this or this. Smaller move, maybe you go for the short put vertical. Depending on how you construct it, you can do a long call vertical, aggressive or conservative. Something conservative, you'd be risking more than what you have to gain. And so it would be a less than 100%. If you're being more aggressive with it, some people like to structure it so you're risking about the same amount as what you have to gain. So it gives you in the ballpark of 100% return. So it just depends on how you construct it. And so, like I said, this normally is going to be about $1.20 is what I was seeing. Okay, so let's suppose here, what if I go type that in? If I go type that in and put this, say our net debit is, let's put a little higher here, 120, because that's what it was floating around earlier today. Suppose that was the net debit versus the 5 cents. Okay. Which one of these would you prefer? Which one do you think might be more appropriate? Do you think the short put vertical is more appropriate? Do you think the long call vertical? Go ahead and chat it in to me here, okay? Yeah, Cameron's helping me out here in the chat that, we'll look for lower deltas while traders looking for higher reward potential will typically prefer higher deltas. Yeah, if somebody did want that higher return, say on that short put vertical with the 37 delta, right? Because that was a pretty healthy return. And even ours that we're looking at here, even though it's a little bit further out of the money because implied volatility is higher, yeah, it's still going to give us in the neighborhood of 42% trade. Okay, David likes the long call vertical, so does Planderson, although that's probably P.L. Anderson, but I'll call you Planderson. Okay, 2 votes for the long call vertical so far. All right, Domac or DWOMAC, yeah. Okay, those who have voted are going to choose. Sometimes I'm really democratic in here, aren't I? I say you guys get to choose. Sometimes I'm pretty bossy though, and I'm the one that does the choosing. All right, so let's do this. Let's put it in here at $1.20 and see if we get filled on it or not. Okay, at that price. Let's go ahead and hit delete for that one. And we're going to throw this into our option strategies group here. Okay, let's look at one more. Let's look at, if we go back to our watch list, bring it up. There are a couple here I was eyeing, and maybe I'll just kind of see which one maybe looks a little bit better technically after the close. So one of them was Lam Research, I should say LRCX. It's been popping along here, just kind of riding the 10-day moving average there, which is nice to see. Its RSI is strong momentum, strong bullish momentum. It's above 70 in the overbought area. The ADX is right at 25, so it's not quite as high as what we were seeing on CRISPR. And implied volatility is dropping here a little bit and kind of is in a little bit of a lower range. Okay, what's your expectation for the stock? I want you to kind of go through your head. Big move up, smaller move up, even, small move down, big move down. Those would be your 5 choices. Okay, what's your expectation for the stock? And again, I didn't tell you what the return was. The last month it's been up about 15%. Okay, so in 1 month it's moved about 15%, which is a decent amount, right? Tell me what your expectation is. Cameron's throwing out probably a class that he has taught recently about choosing strike prices, maybe in response to that question. Excellent. Okay, so we've got a big move up from David. Cornelius, he's appreciating that, Cameron. James says a small up move. Brooks looking maybe sideways. Momentum about to reduce. Maybe because the ADX line here isn't as strong as the other one is. It's dropped down from 29, but it's still above 25, signaling strong. Chuck thinks big move down. Chris says similar move up in our time frame, up slightly, says Sharon. Hesitation based on the whole moving averages, which we're not really using in our discussion here, Michelle. But okay. That would indicate to me that more of you might be looking at something that maybe isn't making as big of a move. Okay, if we come over here to the option chain, it's traded over 9 million shares here today. So we could find some liquidity in these options, but we're going to just stick with the August here. And bid-ask spreads don't look quite as wide. So I could see somebody justifying a long call vertical, maybe that's more conservative, or a short put vertical. Let's see what our short vertical here is. You can see we've got plenty of open interest on either side here, okay, that you could feel comfortable that you're just going to, whatever contracts you're going to trade might be fairly small. What if we look at here? Oh, that is a tremendous bid-ask spread change on us. Oh, look how rude that is. 193 by 284. That's not realistic, okay, guys? Something that traded over 9 million shares today. No, it's not. This is something that's a little bit more likely. 415 by 425, so like a 10-cent spread. That's what I was seeing earlier when the market was engaged. Let's go with this here. Let's go with the 96. Spread it out. Let's do sell the 96. We're going to go sell vertical. 12 cents is kind of puny there. Why don't we spread this out a little bit? Instead of 95, let's see if we put it here at 94. Then we'd get a 43-cent credit. The midpoint price here is coming in at 43, which is on the low side, frankly. Okay. I would expect it to be a little bit higher than that as far as the reward, but I know that bid-ask skew is really throwing it off there because it's so wide on both of those contracts. Again, what was normal when the market was open? About 15 cents on that. Let's do this. Let's look at our calculator here real quick. want to say on this $2 wide spread, we said we wanted at least 55 cents. Okay. If we had 55 cents and divided that by what? $2 wide spread, so $1.45. That would give us about a 37% return. That might be in the ballpark. So what we're going to do, we're going to put this in at 55, and we're going with the one that you weren't expecting quite as big of a move out of. All right, somebody's looking for it to go bearish. I don't know that it would necessarily go bearish with those indicators. I think it's kind of pointing to a little bit more to the bullish side, so that's why we're going to go with a bullish strategy here. And I'm going to put that back to the 55 cents here, and we'll see if we get filled at it. I'll check it out tomorrow, see if we get filled. We're going to do here, we can do 5 contracts. I'm going to go ahead, I'm going to put it in our option strategies bucket. And then we've got a couple of things we need to cover here. So we're going to throw it out there. And I'll watch tomorrow and see if it gets filled. Yeah, Chris says since it's going to execute tomorrow, could you put reasonable price limits? So that's why we've said, yeah, we want at least 55 cents out of it once the market skinnies back up and is in a more normal trading range. Okay. Couple things we need to look at here real quickly. I'm going to change our studies to the 520 crossover because we have 2 trades that we said if the 5 crosses the 20, we got in on it, and if it crosses again, we need to get out of it. I'm going to show you Abbott, ABT here. ABT, we got in a couple of weeks ago here on the crossover. And what is it doing today? It's just kind of been pulling back here. It was hanging around this diagonal support, but our rules aren't based on technical analysis. Our rules are based on the 5 crossing down below the 20, which it did today. So what does that mean? It means we're getting out, okay? It has met our exit condition, and that's the only thing we're looking at, if the 5 crosses the 20. So I'm going to go ahead. We're going to close ourselves out of that trade. The other trade that was on doing a 520 crossover here was Wells Fargo. On Wells Fargo, we got in on the 5 crossing above the 20. We got in right here. And you can see they're quite a ways apart from each other. So this one actually is doing a little bit better here, but we would want to check on it every day, see if that crossover occurs. And if it does, we're going to get ourselves out of the trade. We're not doing an automatic exit on it because the one thing we could consider is we could, if there's enough time, maybe buy back one of the legs and keep the other. So if we come back here to say Abbott, we've only, let's see on this one. Is that our crossover one? Yeah, I wrote down that was our crossover one. I actually think it's, you know what? I think it was, yeah, I guess it was. My note disappeared there. There's our note, 520 crossover. Okay. So like I said, we've got to get out. It crossed over Wells Fargo isn't, so we're just going to leave it in there. Okay. We're going to go ahead and close it out. I'll do that without you since our time is up. All right. Now, I did not see a survey out here today. So you're off the hook with that. Okay. However, you guys have been giving me some really good feedback that I'm trying to use, and you've given me some asks that I'm trying to incorporate as we go through our agenda. So I do appreciate your participation in that. I hope you're following us. If not, go down, click on that little blue YouTube logo that allows you to see our content much more readily, what's coming up. Go to the playlist, look at our little shorts that we've been doing, okay? Look at any previous classes that you might want to go back and take a listen to, okay? If this was helpful to you today, go ahead and hit the like button on your way out. And what I want you to practice in the next week is I want you to do this analysis with yourself. What's the return over the last month? Where's the ADX? Where's the RSI? What is my expectation for the stock? And then based on that, see what strategies might be reasonable for you to determine to use and practice with. Okay, always do these in your practice paper money accounts. All right, Cameron, appreciate you being here today, sending out some great information. Appreciate each of you being here today as well. It's going to be our last class. So tomorrow morning, bright and early, right at the opening bell, 9:30 Eastern time, we will start out with, I believe tomorrow is going to be index options. Ben Watson will be there, and we'll see you then. Have a good evening, everybody. Good night.